Robert Kiyosaki, Increase Your Financial IQ. Increase your financial IQ, according to Robert Kiyosaki. The problem with conventional financial counseling is that it is ineffective. You've been told to work hard, save money, pay off debt, live within your means, and diversify your mutual fund portfolio. But, as Robert Kiyosaki argues in his latest book, Rich Dad's Increase Your Financial IQ, this advice is outdated. Kiyosaki enjoys playing the rogue, delivering unusual wealth-building advice. He's a vociferous critic of mutual funds, for example, and appears to be always promoting a new hot investment, real estate, oil, gold, and silver. He enjoys making controversial statements like people should not live below their means. Financial intelligence. A person does not become wealthy through real estate, stocks, mutual funds, businesses, or money, argues Kiyosaki. What makes one affluent is information, knowledge, wisdom, and know-how, also known as financial intelligence. He points out that while buying new golf equipment will not improve your game, paying for lessons would. Increase Your Financial IQ, he hopes, will help readers better their money game. Financial intelligence is divided into 5 financial IQs by Kiyosaki. Increasing your earnings. The amount of money you earn is used to determine this. If you earn $100,000 per year, your financial IQ is better than if you earn $30,000 per year. Keeping your money safe. You must keep your money once you have earned it. The second financial IQ skill is protecting your money, particularly from taxes. Keeping track of your finances. It takes a high level of financial intelligence to be able to live comfortably and yet invest no matter how much money you make, Kiyosaki writes. The amount of money left over after costs is used to determine your financial IQ. Putting your money to work for you. The return on investment is used to determine this financial IQ. How well do you manage your budget excess to produce more revenue? Increasing the accuracy of your financial data. Financial knowledge entails not just an understanding of basic financial principles, but also a thorough understanding of the investments you make. Making more money is financial IQ number 1. Many people fail to get prosperity, according to Kiyosaki, because they want money without having to work for it. What many people fail to comprehend, he says, is that it is the process, not the money, that makes them wealthy. You can continue to make money by learning to make money. The procedure will be unique to each individual. We all have various objectives, dreams, and goals. The most essential thing is to figure out how to produce more money and then base your goals on that. You must learn to regulate your emotions to make money. You must master the art of deferring gratification. Don't risk your financial future to save a few dollars now. Please don't give up. The situation is deteriorating. Learning to solve difficulties, according to Kiyosaki, is the secret to creating money. To become affluent, you must accept the truth that challenges will never go away, he writes. Identify the obstacles to your financial success, address them head-on, and the money will follow. Financial IQ number 2, protecting your money. Protecting your money, financial IQ number 2. Once you've started making money, you'll want to keep it safe from financial predators. There are 7 of them, according to Kiyosaki. Bureaucrats. While Kiyosaki recognizes the importance of paying taxes, he contends that it is his responsibility to pay as little as legally possible. Bankers. Banks are continuously attempting to steal money from you through fees. It's critical to keep an eye out for this and take precautions to avoid it. Brokers. Similarly, fees from brokers can chip away at your wealth. Brokers who churn accounts, buying and selling stocks repeatedly to generate more commissions, are examples he cites. This happened to us once with the retirement account of the box manufacturer. #businesses. According to Kiyosaki, all businesses have something to sell. It is their business to separate you from your money, it is your job to keep it. According to Kiyosaki, you should consider whether a given purchase will make you wealthy or poorer. Brides and grooms. Money is an important factor in any relationship. You must have faith in your relationship and agree on finances. Barristers. Finally, it's critical to safeguard yourself from legal issues. Budgeting your money, financial IQ number 3. A financial crunch can be solved in one of 2 ways, by cutting spending or increasing income. Both will eliminate a budget deficit, but Kiyosaki feels, as do I, that growing revenue is the preferred long-term option. It's critical, according to Kiyosaki, to think of a budget surplus as a fixed expense. Make 10% of your income a fixed item in your budget if you wish to save 10% of your income. Handle it as if it were any other bill. First and foremost, pay yourself. Kiyosaki states, you can tell a person's future by looking at what they spend their time and money on, channeling the voice of Rich Dad. Time and money are valuable assets. Managing your money, financial IQ number 4. This is the book's most time-consuming and frustrating chapter. It encapsulates Kiyosaki's financial philosophy, but it isn't presented in a way that is accessible to regular folks like you and me. Borrowing money to boost your cash flow is a good idea, according to Kiyosaki, assuming you have the financial expertise to manage the investment. Leverage is risky if you don't have control over the investment. Most of the folks who have been harmed by the real estate catastrophe were counting on the market to keep going up and raising the value of their home, he says. They took out a loan on their home's inflated worth, but they had no say in whether it was repaid. Financial IQ number 5, improving your financial information. Improving your financial information, financial IQ number 5. Warren Buffett is the world's most successful investor, but he never takes a risk. Every decision Buffett and his collaborator, Charlie Munger, makes is based on serious research. They want to know everything there is to know about a firm before they buy it. They can invest with confidence now that they have this information. In contrast, I've made some poor financial decisions. I bought equities in the hopes of seeing them rise in value. These kinds of decisions aren't made based on facts, they're made based on emotion. Increasing your financial intelligence. Though most of this 200-page book is devoted to an overview of the 5 financial IQs, the last 50 pages are the most valuable. It is in these 3 chapters that Kiyosaki discusses the integrity of money and explains how to develop your financial genius. He makes some intriguing suggestions, such as the significance of preparing personal financial statements. He talks about aligning your financial decisions with your values. He writes about the psychology of money, focusing on the fear of failure in particular. He discusses the influence of financial situations in his writing. He claims that finding an atmosphere that allows you to grow and develop is vital if you want to become wealthy and more successful.